Good day, fellow investors. I've listened to this interview with Alden, and the key situation there from both these was that Bitcoin and gold might be the only alternatives. A similar alternative was given in this interview by Ray Dalio, so that's exactly what I want to discuss. Alden's Fiscal Dominance, great analyst, great insights, so really a great overview of the macroeconomics, what's going on there. And the simple summary is, we all know it. I agree completely that the fiscal situation is unsustainable. Once you pass 130 debt to GDP, the most likely outcome is default. There is demographic entitlements, healthcare issues. She has a three-pillar portfolio that discusses high-quality equities plus Bitcoin, cash, and also hard money commodities, likely also gold. Gold and Bitcoin, the winners of this macro environment, and still the likely best exposures you might have in the portfolio. And then also she discussed something very interesting, to go short fiat currencies with mortgages. However, the whole discussion turned most of the discussion into Bitcoin debt. Of course, it was also led a little bit by the interviewer who doesn't know much about finance, that is clear, but is selling violence, is selling fear. Don't know what he is selling or pushing that, but okay, it's just a personal take, nothing wrong. He gets great people on his show, so it's worth to listen to Lynn. However, she is 100% correct on the situations. We have to just see whether the solutions, and perhaps whether the solutions now are and will be of the same effect, as you cannot argue against Bitcoin and other have been over the past 5 years. And the other video summarizes Ray Dalio, a different perspective, but still same conclusion, that the US, UK are in decline, debt issues, political polarizations, how that will be solved. Violence is just one of the potential solutions. We will see how that works. The solution, according to Dalio, is to meditate, to have assets to live in free countries, so go to that country which will do best. And then, of course, diversification, having 15 uncorrelated streams. And this was very funny. The greatest strategy of mankind, according to Dalio, is holding a strong opinion. Holding a strong opinion that is wrong, that is the greatest strategy, because you are not testing it. You want your opinion to be stress tested. And then this is also with Tom Bilyeu, I think. If someone has a different opinion, you should prompt curiosity. That is okay. But when it comes to Tom, strong opinion. However, when you listen there, you feel that it is not based on fundamentals. And the key issue there is, what if the opinion is wrong? Which was then greatly tackled. You hear it in the video, even if the interviewer doesn't emphasize it, by Lynn, going into diversification with 3 pillars. And she says, whatever investment you do, you have to make it in such a way that if it goes bad, you say, okay, if it goes good, you reap the benefits, but it must not be destructive. That is key. I've also listened a little bit to Ray Dalio here, discussing solutions when it comes to investing, and again, inflation-linked bonds as one side of exposure, diversification, and then also gold, alongside Bitcoin in the other interview, gold as key portfolio exposure. Then we have nothing to add on the macro outlook. Everything looks in decline. There is 12 trillion of refinancing coming in the next 12 months. Deficits are piling, recession perhaps ahead. Everyone expects lower rates, then money printing to solve solution, more devaluation of the currency, which should push Bitcoin and gold up. And this works until it doesn't. How to go about it? Well, one solution is diversification. The problem with diversification is that it is impossible to find good assets with good returns that are uncorrelated. You can find a good asset here and there, which is my strategy of value investing, but finding 10 Of course, it would be amazing, but you can't find them. And that is exactly why Ray Dalio hasn't performed that great in the last few years, because the returns on those assets are very low. Therefore, you perform over the long term in line with the fundamental returns of your assets. When it comes to high quality stocks, okay, there's nothing wrong with owning high quality stocks. In a deflationary environment, those should keep on doing well. Hard assets, commodities, gold, again, keep on doing well. And then you have cash to rebalance. If something crashes, you have that cushion, even if you are devaluing it. So, Alden is in line with Dalio, but with much hotter investment ideas, thus much easier to sell. Ray Dalio is selling diversification as protection to billionaires. Alden is selling, let's say, hot investments that are doing and will be doing great as long as the environment doesn't change. So nothing wrong with that. By the way, when it comes to selling, everyone is selling. I'm selling a value investing perspective on things. You can check everything on my research platform. And the return where my focus is are fundamentals. So earnings, earnings growth, earnings yield. Because what is my key problem with diversification? Okay, if it goes bad, nothing happens. If it is good, wow. So that's a smart way, nothing wrong to go about it. The problem with diversification is that, for example, if you take Bitcoin or gold, you have not really a fundamental yield. You don't have a business that can grow. You don't have something to hold on that will do well beyond the power of just money, no matter what. Perhaps Bitcoin will go to 1 million, perhaps not. We don't know yet that. So you have that, let's say, gamble or hope that supply and demand will keep on growing because it has happened in the past. When it comes to gold, also reaching all-time highs, but inflation adjusted, gold is still at the peak of the early 1980s. So inflation adjusted, those that bought at the peak there are zero real returns for 40 years. And that is what I'm missing with this, let's say, supply and demand based price bets. Diversification, yes, but those are still price bets. Of course, this is better than 60-40 that most pension funds are destroying our money with, but that's a different story. Speaking about price, this was a great comment. Mentioned somewhere we should invest in things that others can't invest so that the price is still low. But here they say, okay, we should want everyone and anyone to be able to invest so that the price goes higher. But this is, in my opinion, really what is the driver of the current market, and that is just price. That works until it doesn't. And when the market turns and there is a negative decade, then only fundamentals work. I don't know whether it will turn or not, but if it turns, I'll keep on investing on a fundamental basis. I can't predict the future, I can just see what works best for me. And speaking of hard opinions and based on price, let me just give you an example. Ray Dalio here, he went bankrupt in 1982 because he correctly predicted that Mexico would default. He then projected that that will lead into a crisis and a further stock market crash, and he went bust in 1982. And look at this historical chart. Since exactly when Ray Dalio sold everything and lost a lot of money, the market exploded. However, if we just look at this period, from 1968 to 1982, the market did nothing with 3 big crashes. So it was easy to expect that the market will continue to crash. If we look at recessions, 1, 2, 3, 4 recessions in a decade, so everyone was pessimistic and all was negative, and Ray Dalio bet it will continue forever. Now, 43 years of bull market since 1982, no recessions, low rates, money printing abundance. It seems that the market is betting that prices will keep on rising because that's exactly what has been going on for the past 40 years. And we have had no recession for more than 16 years now. I can predict the future. I will keep on investing on fundamentals, but when it comes to this macro perspective, we should be looking at it, I think, also bottom up. You should have to look at your job, the security of your job, if not educate, learn, change something. Property, inheritances, that also impacts your decision making, your risk exposure, your current wealth, where it is placed, the cash flows, the yield, how much diversification you already have, you need, your business in line with your job, of course, the flexibility you have for just the cost of living. We can lower our cost of living by 80% like this next month, and we could still go on. We've been poor in the past, so we know how to live like that. And only after you check all these things, then you move on to investments. And my strategy is simply value, no gambling. Value where you can find it. 5-6 years ago, I was telling everyone, take a mortgage, take a fixed 30-year mortgage, take a mortgage. That's one of the best investments I could give you. Well, that was good. When it comes to value, I don't know what others will think about prices. I don't want to base my financial well-being on that price situation. I want to base it on real fundamentals, real value, and then I go and search for that value. So, just a difference in opinion that I wanted to discuss here. And just to compare that value versus price situation, let's just compare Bitcoin. $500,000, $1 million, it is possible. The thing is, just for disclosure, whenever you trade crypto, I make money because my investments are not in crypto, but we provide liquidity to markets, so also crypto. So the more you trade, you see, no risk. If you trade, I make money. If you don't trade, I make money when it crashes. If it goes up, I make more money and more trades. But Bitcoin as a value there is based on supply and demand, nothing else. On the other side, investing is about dividends that you can reinvest, diversify, based on real value creation modes, necessities. You don't need the price to go up to make money. You just need a cheap price that has good fundamentals. My solution to whatever happens in the future is 10% plus earnings yield, growth, businesses, moats, strong things, high quality businesses, yes, but at fair prices. That is always what I want to discuss. How much you pay for something is key. Price is what you pay, value is what you get, and that is perhaps the key sentence that I feel is overlooked in today's financial world.